Welcome back to Investing Talk Podcast. Today, we're embarking on a deep dive into a company that's been generating, well, quite a lot of buzz in the battery space, SES AI Corp. You've sent us your sources, and we're ready to unpack them. We want to tackle that big question on everyone's mind. Is SES AI Corp actually a good time to buy right now? Before we really dig into the nitty-gritty of SES AI Corp, just a quick reminder. If you find these deep dives helpful, please remember to subscribe, like, and maybe leave a comment. Your engagement truly helps us bring you more of these in-depth analyses. And hey, if you're feeling extra generous, you could even consider buying us a coffee. Also, really important, if there's a specific company you'd like us to look into for a future deep dive, please make sure to leave a comment below. We love hearing from you, and honestly, we craft these for you. Okay, then let's unpack this. We've got quite a stack here: reports, earnings call sentiments, market analyses, all to guide us. Our mission today is really to distill the core insights from your sources,
so you can feel truly well informed about this potential investment, cut through some of the noise, and get straight to what really matters. So we consider any company as an investment. We always start by looking under the hood, the fundamentals. What does SES AI Corp look like from, let's say, a basic business perspective? Those initial numbers really jump out, don't they? Especially their revenue growth in Q1 2025, a whopping 190% quarter over quarter. That sounds, well, explosive.
It absolutely is robust growth on the surface, but it's crucial, really, to put that 190% into perspective. It's starting from a pretty low base, you see. The trailing 12 months revenue, TTM, it's currently only $7.83 million.
Okay. So big percentage, small number.
Exactly. And the real challenge, despite that impressive top-line surge, is profitability. SES AI Corp, well, it continues to post significant net losses. We're talking $97.06 million TTM.
Wow.
So yeah, while sales are climbing fast, they're still bleeding cash.
So rapid revenue growth, check. But deep losses, also check. That brings up those critical questions then. What about their profit margins and cash flow? Are they just, spending more to achieve that growth?
That seems to be the picture, precisely. The sources indicate gross margins are actually high, which is a good sign for their core product, definitely. However, operating expenses and, importantly, cash burn are substantial. This was highlighted in their Q1 2025 earnings call sentiment. The company is definitively not profitable yet. Cash flow is negative, which means they'll likely need ongoing financing to fuel operations expansion.
Makes sense.
Though it's worth noting the sources don't actually detail specific debt figures for us.
And looking ahead, do the projections suggest a path to profitability anytime soon? Or is this like a long road ahead?
Well, future earnings projections do anticipate continued strong revenue growth for SES AI Corp. That's the expectation. But profitability, that's not expected to be imminent, not with those consistently high operational costs. It's really a classic growth over profit strategy for now, very common in these kinds of tech plays.
This leads us to their market positioning, which I have to say is where things get genuinely interesting. SES AI Corp specializes in AI-enhanced lithium metal and lithium-ion batteries. And these aren't just niche products, are they?
No, not at all.
They're foundational for electric vehicles, drones, robotics, energy storage. These are all sectors experiencing massive long-term growth, what we often call secular tailwinds.
That market positioning is certainly a huge draw, a big part of the bull case, you could say. But it also raises an immediate point about competition.
Yes.
The competition...
While the sectors are incredibly promising, the landscape is fiercely competitive. Really fierce. We're talking about established giants here. Think Tesla, Panasonic, CATL.
The big players.
Exactly. They're all vying for market share. SES AI Corp's Molecular Universe platform. It's touted as a technological edge, their secret sauce, perhaps. But its actual market adoption, and crucially, its ability to scale up significantly, that's still very much unproven, still a question mark.
Okay, so we've got a handle on the business itself. High growth, high costs, promising but very competitive market. Now let's pivot to how the market is actually valuing all of this. What do the valuation metrics tell us about how investors are seeing SES AI Corp?
Right, valuation. Given that SES AI Corp has negative earnings, a traditional price to earnings or PE ratio, well, it isn't applicable, doesn't exist.
Right, no, exactly. Its market capitalization stands at about $345.54 million. But the really striking metric is its price to sales ratio, the PS. It's approximately 44, based on that $7.83 million TTM revenue we mentioned.
44? Wow, that sounds high.
It is very high. A PS ratio of 44 for a company still deep in the red It tells you investors are pricing in, well, a moonshot.
A hope and a dream, basically.
Pretty much. This isn't about current value. It's a pure wager on a future where SES AI potentially dominates a massive market. And that future, it's far from guaranteed. There's also no discounted cash flow model provided in the sources we looked at, which reinforces the point. With this high PS and the lack of profitability, this stock is highly speculative.
Okay, numbers are one thing, but how has the stock actually been behaving on the charts? What's the technical picture? What does it reveal about its recent past and maybe potential movements?
Well, the sources show SES AI Corp has exhibited perhaps unsurprisingly high volatility. Its 52-week range stretched all the way from 20 cents up to $2.53.
Quite a rate.
Huge range. It recently closed at 0.94 cents. And the stock has generally been in a downtrend since hitting what's called a pivot top back in June 2025.
So a point where it turned downwards.
Essentially, yeah. A key point where the upward momentum reversed. Daily volatility hovers around 6%, which, technically speaking, indicates a medium risk profile just from a pure trading perspective.
And where are the crucial price levels? The ones to really keep an eye on. What are the key support and resistance zones that charts are showing?
Okay, support is identified around the $0.90 to $0.92 settle. That seems to be a floor for now.
Check.
But this raises an important question. A breakdown below 90 cents could unfortunately signal further declines. That's the risk there.
And resistance. Where's the ceiling?
Resistance levels aren't quite as clearly defined in the sources, but those previous highs near $2.50, they serve as major hurdles. The stock would need to clear those to show a really significant reversal.
What about the common technical indicators? Do they shed any light on the current trend or momentum? Anything interesting there?
It's a bit mixed, actually. The sources point to a buy signal from the 3-month MCD.
Oh, interesting.
Yeah, the MACD moving average convergence, divergence, it tracks momentum, so that's potentially positive. However, the long-term moving average is currently above the short-term moving average.
Which is usually bearish.
Generally considered bearish, yes. And while specific RSI data, that's the relative strength index, isn't provided, the overall trend suggests a negative bias still. The sources also mentioned that trading volume has recently fallen, even despite some minor price gains.
Not ideal.
No, that can often indicate weakening conviction behind any upward moves, fewer people participating.
Okay, so beyond the raw numbers and the chart patterns, what's the general buzz around SES AI Corp right now? What are the recent news items, and how is the overall market sentiment shaping up?
Well, the Q1 2025 financial results, they did highlight record revenue and those high gross margins we talked about.
It's the good news part.
The good news part, exactly. But as we also discussed, the high cash burn and expenses were also prominently featured. Can't ignore those. Right.
Now, when we look at analyst sentiment, it's generally hold. That's the consensus, with an average 12-month price target of around $1.50, which, suggests a potential 59.25% upside from the current price. Still significant potential if they're right.
But still a hold. Interesting.
It is. However, another source, TipRanks, shows a slightly more optimistic moderate buy consensus, and their average target is higher, at $2. That implies 110.53% upside.
Okay, so a noticeable divergence there between sources.
Definitely. Something to be aware of.
Are there any significant product developments or maybe strategic announcements that might be fueling some of this sentiment, perhaps the more bullish side?
The launch of their new online platform, Molecular Universe, is certainly noted as a positive catalyst. It sounds intriguing. Yeah. It's an interesting move for sure. But its concrete impact on future revenue, on actual adoption, that remains uncertain at this early stage. We need to see results.
And stepping back a bit, what about the wider sentiment? Like, what are we seeing on social media or from independent bloggers, maybe? Yeah, that's interesting, too. Blogger and social media sentiment is reportedly quite bullish, showing 70% positive sentiment compared to a sector average of 63%.
So the online crowd is more optimistic than the analysts, generally.
It appears so. There's certainly enthusiasm in those communities. However, as we just saw, the professional analyst optimism seems more tempered, likely by the financial realities we've been discussing. It's also worth noting there's no data available on insider buying or selling in the sources.
Ah, okay. That would have been another useful piece.
It would have, yeah.
So, with all of that in mind, what should we be watching out for? What are the key catalysts that could really move this stock, up or down? And equally important, what are the major risks that investors absolutely need to consider?
Okay, catalysts first. In the short term, the next earnings report. That's scheduled for July 28, 2025. It's highly anticipated, and given the stock's volatility, almost certainly going to cause some movement.
Yeah, earnings dates are always key for volatile stocks.
Definitely. Also, any concrete updates on that molecular universe platform, or critically, announcements of new customer wins or expanded partnerships, those would be significant positive catalysts.
Right, with business traction.
Exactly. Looking longer term, the broader adoption of EVs and energy storage, that's the macro trend they're riding.
Yeah.
Further significant partnerships, especially with major automakers. And ultimately, proving the true scalability of SES AI Core's battery technology. Those are the key drivers that could propel it forward long term.
But with those exciting potentials, there must be significant risks too. What are the specific hurdles and pitfalls the sources identify?
Oh, absolutely. Execution risk is high here, very high, meaning the company's ability to actually turn its innovative technology into a commercially viable, profitable business. And that's far from guaranteed. It's a big if. Stock-specific risks include that persistently high cash burn we keep mentioning, continued losses, and the unproven nature of their core technology on a large scale. The stock itself, as we've seen, is highly volatile and speculative. Then there are sector-specific risks. Intense competition, we covered that. Also, the rapid pace of technological change within the battery industry, it's a constant race to innovate. Someone else could leapfrog them.
Always a risk in tech.
Absolutely. And potential supply chain disruptions, always a factor these days. On the macroeconomic front, things like rising interest rates could hurt growth stocks, swings in commodity prices, especially lithium, obviously critical for them, and just general global economic conditions affecting overall EV adoption that could impact the whole sector.
Lots to consider there.
One more thing. While average trading volume is reasonable, the stock is still a small cap. That means there's elevated liquidity risk. It might be harder to buy or sell large quantities without impacting the price significantly.
Okay, so bringing it all together now, what does this deep dive really mean for someone out there wondering if SES AI Corp is a good time to buy now? Let's try to summarize with a rating and maybe some recommendations straight from the sources.
Okay. The sources collectively give SES AI Corp a rating of 5 out of 10.
Right down the middle.
Exactly. Characterizing it quite clearly as a high-risk, high-reward play. The rationale is pretty balanced, reflecting our discussion. The company operates in a hugely promising sector, no doubt. It has impressive revenue growth, albeit from a low base, but it confronts significant hurdles in achieving profitability and successfully scaling its technology. That's the other side of the coin. The current valuation, as we discussed, is quite rich relative to its current fundamentals. It's pricing in a lot of future success. And the technical trend is currently bearish in the near term. Analyst sentiment is mixed, as we saw, and those upcoming catalysts could certainly swing the stock sharply in either direction. It's a bit of a knife edge.
So for those listening who might be considering potentially taking a position, despite the risks, are there any suggested entry price ranges or maybe strategies outlined in the sources?
Yes, there are some suggestions. For long-term investors, the recommendation is to maybe consider building a position on dips, specifically below that 90-cent level where technical support appears strongest, buying on weakness, essentially.
Okay.
For short-term traders, the guidance is different. It's more about exercising caution. Wait for confirmation of a new bottom pivot, a clear sign the downtrend might be reversing, or wait for a decisive breakout above recent resistance levels. Don't try to catch a falling knife, basically.
And what about the time horizon? Is this viewed more as a short-term gamble or potentially a long-term hold, according to the sources?
For the short term, it's explicitly labeled as highly speculative and risky, suitable only for experienced traders who are genuinely comfortable with extreme volatility. You need a strong stomach.
Got it.
The current trend is negative, but sharp rebounds are certainly possible around those major support levels. It can bounce hard. Looking at the bigger picture, the long-term view, there is indeed potential for very significant upside. That's the allure. If the company achieves major technological and commercial breakthroughs, big if.
Right.
But there's also substantial risk. Risk of shareholder dilution from future financing rounds, which seem likely, or even in a worst-case scenario, outright failure. So it's really only appropriate for investors with a high tolerance for risk who understand what they're getting into.
And for those who do decide to take the plunge, maybe dip a toe in, what's the guidance on managing that risk? Stop losses, take profits.
The sources suggest setting a stop loss somewhere in the $1.85 faster sells $0.88, just below that key technical support level we identified. The idea is to limit downside risk if that support breaks.
sensible.
For short-term trades, the suggestion is to consider taking profits around $1.40 and $1.50. That aligns roughly with some of those analyst targets.
Okay.
For long-term holds, if the investment thesis actually plays out over time, scaling out selling portions near $2.50 is suggested as one option. But, and this is critical, remaining vigilant to both the fundamental progress of the company and the broader sector trends is absolutely key. You can't just buy and forget this one.
So what does this all mean for your portfolio? Our deep dive into SES Corp, well, it reveals a really fascinating story, doesn't it? A company at a critical juncture. It's clearly a speculative growth stock. Significant upside potential, no doubt, fueled by its position in a really high-growth sector. But, and it's a big but, it comes with substantial risk. High cash burn, current unprofitability, intense competition. It's all there.
Yeah, the bottom line here seems to be that it's probably better suited for long-term, risk-tolerant investors, people who can stomach significant volatility and potential losses. It's likely less suitable for short-term traders seeking stability or predictable returns. The absolute key will be to closely monitor upcoming earnings reports, any product milestones. Look for those concrete signs of fundamental improvement and real commercial traction. Which leaves us with, I think, an important question for you to consider. Given everything we've discussed, how much risk are you personally willing to take on, especially on a company that could potentially revolutionize an industry or could just continue to burn through its cash without ever quite getting there?
That is a great thought to leave everyone with. Thank you for joining us on this deep dive into SES Corp. We really hope this has given you a clearer, more informed perspective on whether this particular stock might be a good fit, maybe not, for your portfolio at this time. Until next time, keep learning, keep questioning, and stay well informed.